All right, hey everybody, welcome to the show this morning, and good morning, all my channel members like Goose and Rob and Rex and Don and Donald and Arturo, Gayton, Jason, Roland, Bob, Amy, Cliff, Frank, Hangers to Happiness, and my man Wrongimer. Good to see you, Ray. Darren, how's the weather up there? Getting cold yet? Tom, good to see everybody, and welcome to the show. Well, welcome. So, if you want to chat with me, if you want to say, hey, good morning, like all these fine people, click the button over here, be a subscriber on the channel, and after a little bit, if we build trust, consider being a channel member and going deeper and getting more behind the scenes, awesome action. Anyway, so this morning, I plan to talk about the fact that we keep crushing it, creating new debt. I mean, the U.S. government is a debt creating machine. Check this out, though. Where does the money come from? Where does it go? What are we really talking about, right? Where do we spend the money? Now, the problem's really simple, right? We are spending more than we're bringing in. That's, bottom line. Simple. Very simple. Now, the deficit is that's if we cut that out, if we make it a surplus, this takes care of itself. All right. The solution is simple. It's just like household spending. You can't spend more than you make. You go into debt. But you have to make more than you're spending in the future, including the debt payments, to get out of trouble. We're in trouble. All right. I was talking about this with the Termite Trading Lab group yesterday in our monthly meetup, our monthly roundtable, that this is a problem no matter who wins the White House. Look at that. Total receipts. I mean, this is very, very clear. Total receipts. Total outlays. It's simple. We cannot keep this up. Like that. That's the problem. Right there. How do you fix it? You stop spending it. Cut that much spending out of this. Well, nobody wants to do that. Yeah, that's the problem. All right, look. Line items. Line items. Social Security. Right there. Right there. That money should not be allocated to anything else. Nothing else. Now, everybody says tax corporations. Look how small that number is. There's not really, if you tax corporations, all you're doing is taxing consumers. That number is really just tax over here. Taxing corporations is taxing consumption. It's difficult for a lot of people to realize, but that taxing corporations is taxing consumption. If you want to tax consumption, tax corporations. They'll roll it right into product prices, cause inflation. So really, we're down to this. This right here is all we can spend on this. And we got some excise tax and custom duty, blah, blah, blah. This, nothing. We spend that in a few seconds. This, nothing. We spend that in a second, it seems like. So there are miscellaneous receipts. They don't add up to a whole lot. Don't really amount to much. But we gotta cut some of this stuff out. It's too many entitlements. All right. Two things I see in here that are big problems. That and that. And this one, as long as we keep creating more debt, that's directly tied to that. Right there. This one over here. It's a flawed program anyway, but we have enough coming in to cover that for now. And this money should have never been used. It should have been kept in account, growing, invested in the economy, just like they planned on it, but it was not. If it had been, things would be a whole different story. But hey, look at that big account over there. Let's spend it. Spend it today. Grasshopper and the ant. Now, the big news was that this number eclipsed this number. But it also eclipsed this number. And we're getting close to eclipsing this number. And if we keep on the path, I'd say within a year, maybe two, we're going to be bigger than this number. And at that point, the house of cards may come tumbling down. Student loan debt. Look at student loan debt. I mean, student loans on here. We're just talking about government spending, not personal consumption spending. But look at that. Nothing. Such a small number. We could cut that out. Now, transportation, that's kind of important. But it's peanuts compared to where we're really spending money. The big problems. And really, when the government got into education, this number swelled. Just like everything. Like everything the government gets in. Medicare, reason it's shot up, because the government got in. Health, the reason that swelled, the government got involved. So, this is, yeah, you can't spend more. I mean, the solution is simple. Cut spending. There's your, it's not raise taxes. It's not, there's no money over here to get. Right? That's the problem. There's no money over here to get. This needs to be cut out. Cut this out, problem fixes. Healthcare is like healthcare.gov. That's Obamacare. Medicare was already existing. Health is Obamacare. Hard to believe we spend that much money on it, right? And it just keeps exploding higher. Government gets in, everything costs more money. That's a problem. And you used to be like, well, if we raise taxes, not going to fix it. Not going to fix it. Only way. It's a painful solution, but it's a simple solution. Cut it so there's a surplus. Cut this till you have a surplus right there. There's no, like, so you can confiscate the wealth, the entire wealth of the top 1%, which is a lot of people. Confiscate the entire wealth. That only runs the government for 9 months. Think about that a minute. Confiscate the entire wealth of the top 1%. All those billionaires they talk about paying their fair share. You confiscate their entire wealth. We only fund the government for 9 months. Some ridiculous numbers I posted in the Termite Trading Lab group last night. Let me pull this up. Like, it's shocking. Shocking. Right here. Gotta pull it up. Shrink the chat I was looking for. The U.S. debt has jumped $473 billion in the last 3 weeks. 3 weeks. $473 billion. That's almost $500 billion in 3 weeks. That's crazy. That means the U.S. took on $1,450 for every citizen of the United States in the last 3 weeks. In 3 weeks, we spent $1,450 per citizen. It also means that every U.S. citizen now owns $103,000 of debt. Think about that a minute. What if they sent everybody a tax bill for $103,000? It's not like, what's the fair share? Well, everybody's in this together. Everybody lives in the same country. Doesn't matter if you're working or not working. Fair share is fair share of everybody. Just because you're lucky enough to make more money doesn't mean your fair share should be higher. We all live in the same country. We all take advantage of the same things. It's kind of wild when you think about it. Anyway, I digress. The solution's simple. Goose was talking to me about the Fed setting the rates. Well, if you've been here more than a minute, you know the Fed doesn't set the rates. The market sets the rates. What's the Fed likely to do? Here in 2 weeks, the next Fed meeting coming up right here, Wednesday, Thursday. So this is going to be an exciting next 3 weeks. We've got Tesla earnings tomorrow. We've got big tech next week right here, a lot of it. We've got the election here. We've got the FOMC meeting right here. So this is going to be an exciting little period of time here between now and right over here. 1, 2, basically 2.5 weeks. Things as we know it could change drastically in the next 2.5 weeks. What is the... Looking at this. This is DGS2. If you've never seen this before, Delta Golf Sierra 2. You can pull it up in TradingView. Just type it in right up here. Push the compare button. Type in FED, FUNDS, Foxtrot Echo Delta, Foxtrot Uniform November Delta Sierra, FED, FUNDS. Make this, the orange line on my chart is the Fed funds. You can make it any color you want. Click right over here. Click the style, change the color. I've got it orange. Blue is the DGS2 line. Delta Golf Sierra. That's the 2-year constant maturity rate. The government, the Fed, chases that rate. Right now, they went higher than they should have. And now the Delta Golf Sierra is down here. We did have a little spike, but we're certainly down lower. And if they cut, see, they cut from here. They actually cut down to here. This actually should drop on down. And then if they cut again, even if they cut almost a whole point, they'd still be above the market rate. Now, what is the market actually like? Stability. They don't like the Fed tinkering with the rates. That's uncertainty. The market likes stability. That's we had a lot of growth when the market was stable. Cutting rates, think about it this way. Central banks around the world are cutting rates at a pace that's similar to as if we're already in a recession. And if you take out the government spending from the GDP, we've actually been in a recession for almost 3 years. That's crazy. It's crazy to me. I don't have the awesome chart with GDP x government spending. Let me see if I can find it really quick. Type GDP X and excluding, and Google fills it out for me. Knew what I was looking for. Let's see if I can find it. Yeah, so government spending is rocking at 22%. This is just Fred right here. Government spending is rocking at 22% of the GDP. If you took out 22%, where does that leave us? Remember this chart? Remember this page? Look at that craziness. Assets per citizen, liabilities per citizen. We're insolvent. Absolute craziness. It's a problem. I mean, it's a real problem. It doesn't matter who wins. There's no easy button solution to this. We cut spending. It's going to hurt. It probably lead to a depression. Like, the challenger wins. We implement the Department of Government Accountability, the Doge, and it's like a heroin addict. You take away the drug, we're going to go into fits. All right, we're going to have a period of rehab. It's going to hurt. We're going to be jonesing for that spending. It's going to have shockwaves all through the economy. So this is real stuff, and it's really going to hurt to apply the solution. It's a simple solution, but it's really going to hurt. The other team, the incumbent team, they win. Keep things as is. Keep spinning. That's going to hurt. Because it just kicks the can down the road until we really become insolvent. Then we have hyperinflation and possibly lose reserve currency status. And we're already on the path for that. Major problems coming up down the pipe. It's going to hurt. This is why I say it doesn't matter who wins. When we get up here, the next path, it's very simple. I see it on the chart. It's on the chart for me. It's kind of, the pieces are all clicking together, kind of. Once we get wherever the top is, this is the next move. And that's the bubble pattern, right? Everybody see it? Probably do a little bit of this. People will be like, oh, we'll just buy the dip. Right there. Look, think about it. We're all in this euphoria state right here. A few of us see the problem. Be like, oh, we fixed it, all clear, and then it's gonna hurt. We're talking about the whole economy doing this, the entirety. It's gonna hurt. Now, if we go the hyperinflation route, this thing could just rocket ship higher. I don't want to. That's a scary path. All right, that means all the things you save for, and things just become ridiculously expensive. We're talking, $1,000 loaves of bread, $10,000 loaves of bread. That's the only way to make debt so small, the current debt so small that it doesn't matter. That's the incumbent team side. The challenger side, cut the debt. But this is probably the result. I think it's double bad. Double bad. Bad and bad. Your choice. Bad or bad. That's what we got. I don't think there's any soft landing to it. All the rhetoric is just on a small time scale. This problem is still cooking. It's coming. It's cooking. I'm not trying to scare you into selling everything today. It's not today. It's not tomorrow. It's probably not next week. Next month. Well, it could be next month. We'll see. Right now, S&P. Let's clean it up. Clean it up. We got to jump down and look at this. So yesterday, I kind of outlined. Sometimes I get lucky. I don't know sometimes. So I was kind of outlining that looked more three-wave choppy overlapping-ish up. And guess what we did? Lower low, Came back up. That was 1, 2, 3, and lower low again. That high, this low, this high. 100%. Look at that. So far, that's a 3-wave correction, but this third wave is not 5 waves at this point. Probably not done yet. Probably not done yet. Now, interestingly enough in here, this move, 1, 2, 3, 4, didn't overlap. That one and that one didn't overlap. 5. That one a little deep. I thought we might be done. Came up in 3. Nope, not done. Lower low. So this is probably wave 1. This is wave 2. Right to the 618. This is where it gets kind of ugly, at least in the short term. Just being realistic with you, talking about where I think we might potentially be heading. So we've got to focus on this move down. Helps if I actually click the fib tool. This move down, this retrace, this next move down, likely to go right to here in this vicinity. 3. Get a retrace 4. And nominal lower low 5. That's probably what we need to do to finish this up. Bottom somewhere in this vicinity. Now this could just... Now 3 can't be the smallest wave. So at this point, it's smaller than wave 1. And if we do a 4, 5, 5 has to be smaller. That's the only rule. It doesn't have to be the biggest wave, but it can't be the smallest wave. 3 here. And this is a 5th, this is the finality move of a correction here. So it's technically a part of an A, B, and this would be a C somewhere over here. Maybe it ends up here. Maybe it ends up here. Hard to judge. Ideal proportions would be there. More, I guess, balanced proportions. Can't overlap the 2. Could see something more like this. But right now we're overlapping the 1. It's probably not done yet. Probably going to see more downside. That's what ES is telling me in the short term here. Since we developed from what we developed, the price action we developed since yesterday. I was talking about it when we reopened Sunday. If you missed it yesterday, I was talking about what this looked like. How it looked like a 3-wave. We were kind of potentially bottoming here. We were rallying up in here. And then when we did that, and we went lower than that low right there. Now, the downside's probably down to 5,800 before we can turn it and burn it. In Q over here, just having fits. Fits and fits and fits. So we probably got some downside to go. Russell. No clear path on the smaller time frames. Really, at this point, still below this high. Are we filling out a head and shoulders? Are we going to roll it? That's a good question. So what's interesting here, kind of looking at it this way. It's kind of a, I mean, it's like a head, shoulder. If it's a head and shoulders rejection, inverse, very typically, that might be a return to the roadmap line, may be in order right here. CO. This is curious. That could be working on head and shoulders, and we get another flush right into the election. That'd be an interesting turn of events. Oil's trading like there's a global recession. Let's be honest about it, right? I mean, think about it. Oil's kind of trading like there's some sort of global recession going on, right? If we're being honest about it. It certainly doesn't look like there's huge demand and strength. But if that completes right there, we break down, could be talking about a move down to 60, which is the lower low I was mentioning that we needed to finish this baby up. At this point, possibly could go down here. We'll see. Could get continuation all the way to the flush out. That's the big watermelon seed squeeze pop target down there. This like consolidation. We popped up, retested, breaking down, a flush down here, which kind of makes sense. Gold keeps rocking and rolling higher. Look, this is it's probably going to 3,000 at least. At 2760 level, just right above us. That is resistance. But right on up here, probably where we're heading. Just a reminder where that target comes from. It's an echo of this move right here. We did this move back here, 2018 through 2020. That's an echo higher right there. Puts us right around that 2,900 level. May come up just shy of 3,000. Something playing catch up. This one right here. Remember, tonight at 5 p.m., I'll take requests. So what percentage drop? We're talking about 1,200 on the S&P. That's like what? We can roll back and talk about it. That's almost to the 35 targets. Cha-ching. Said 35 for a long time. It's kind of crazy. It happens. Sometimes I get lucky. 40 is the target above that, but we may stop at 37. 37, this 36, 37, high 36, low 37 area right here may turn out to be a significant resistance that we get another retrace before we can pop through to get to 40. Really close to that 35. If we get above 35, it might be time to start considering where you want to book some profits, because we may be in for a consolidation for a little while. We may. It could just keep ripping, but we may be in for a little consolidation. Just throwing that out there. It's been a wild, fun ride. If you've been along with me since we got in over here, like in March, when I started loading up on stuff, this has been a wild, fun ride, eh? Yeah. I mean, especially if you got the NEM stuff I jumped into. Everybody talking about how horrible gold and silver was. I was loading up, and here we are. Beautiful move. Bitcoin rejecting the breakout so far. No good news off of that. That's 3 waves up. Did not get proportions on this last move to be indicative of a new trend. Rejecting here does not make me feel good. Does not make me feel good at all. We may do another dip between now and over here. This is Thanksgiving time. This is 220 days post-halving. Gets me a little concerned right now. Ethereum Did not. Well, I guess on the futures it made that spike up to just shy of the roadmap line. Didn't actually touch yesterday. I had alerts that were supposed to go off if it touched. This is futures, of course, not the actual spot. Spot also did not touch. Came up just shy. Got really close, but didn't touch. Bummer. Dollar, right in the resistance zone. Could push that on up just a little bit. Is it log mode? Is it not log mode? Doesn't really matter. Resistance zone goes on up to about 105. It's where we've consolidated a bunch of times. You can see these spikes over here. That's why the resistance zone is up there. Those spikes up, that spike down, that zone, resistance. If we can get through it, we're probably going to go up again. If we reject it, we'll probably go down to the mid-90s finally. The ultimate path is probably down. Just don't know how long we work on this current little doodad here that we're working on. Japanese futures rolling. This is what I was concerned about. This rolls. This breaks below the, we got below the uptrend of lows. First line of support here. Next line of support here. Just below it. Next line of support here. We start breaking these lines of support. The U.S. market's probably going to correct with the Japanese market. It's 3 waves up. Continuation down. Gets pretty ugly. We could be talking about a move down here to 24,000. And that's going to hurt global markets. That's a lot of liquidity going to flush out of the system. It's big numbers. And 35%. That's going to hurt. It's going to hurt. Now, the funny thing is, the hedge funds and stuff saw this coming. They were getting out of the market starting in June. They were getting back into the market at kind of the fastest pace we've seen lately. What if everybody gets ripped? It's going to hurt. It's going to hurt. And then this probably won't last long. It'll be a flash down and go higher again. So that's kind of the macro environment there. We're seeing the S5FI dipping yesterday. It's probably going to come back down right in this vicinity. Maybe the roadmap line, maybe to the uptrend of lows, which is not very tight right there. Could come back down in this 59 area. We could get there in a day or two, and then we may attempt another high. That stocks above their 50-day moving average on the S&P. Eventually, we've got a date with the bottom. One of these days, we're going to get the bigger flush and head toward the bottom. Haven't been down there since back here a year ago. It's kind of relatively rare that we spend a long time without getting at least close to the bottom. We got close to the bottom. I mean, it's relatively rare we don't take a trip down in that vicinity for a year. This has been one of the strongest stock markets in the history of the stock market. Believe that or not. I'm kind of surprised by it. The percent, we're up like 22% this year. It's just wild to think about. With all the craziness. And then the fact that VIX and MOVE, two of these warning tickers. MOVE, US bond volatility. That's trading like something's about to happen. VIX, not at the bottom. We're not at all calm levels. We're elevated. It's trading like some stuff's about to go down. Interesting. That flush out in the Japanese market caused a giant spike, and that may be a mini spike compared to what potentially could come. I'm not trying to scare anybody. I'm just, you gotta keep your wits about you. What's happening? All right. Target on the list again. What the heck is going on? How does it make the list every day? Let's see what it was doing in the extended hours. Yeah, I'm not sure that was up. I don't know. I use a tool and it said it was up in the pre-market, but obviously not looking hot. ASML up $6. Yeah, I just rank it by what it's up in the pre-market. $2 or more gets it on the list. And even though it's a red candle, it's up $6. I don't know. I still feel like that one's potentially got more downside to go. We did hit the target. It took a little longer than I thought we might. Of course, time is the hardest part of this whole thing. Could we go deeper? Yeah. Is this a reversal yet? No. Am I buying it? No. That's 3 big waves up and does not make me feel good about doing anything with this one at the moment. Now, it could be a 1-2, 1-2, but this 2 is very deep, concerning. MLI, well, that's a heck of a pop. No retrace in here, no indication that we were going to pop, so that's just being wild and crazy. We're way past any expected targets at this point. Up to the 4236, that can be the end. Could rally on up to 112, possibly. That's like a 1% move, less than 1%. And it could happen. Not likely. It can happen. Not the high probability stuff I'm looking for. MMM, 3M, volatility up here. Was popping, now we're dropping. And I thought we would retrace from here, but we popped on up. And now maybe we retrace. It's starting to look more like the beginnings of what could be 5 up. But we'll probably do a 4 or 5. We way exceeded. That's a extension on a wave 3. That's why you never sell yourself short on a wave 3, or you try not to. Now, we could get a consolidation back to the roadmap line before we see the 5th wave extension. Yeah, it could put us up. We could see this back to the roadmap line, touch in there around 115, and then rally up here to kind of finish this move, and then we get another retrace, some more choppy stuff before we get the next move up. SAP, let's pull up the US version, not the German version. And that's just popped up. Still likely to retrace at some point in time here. Still likely to retrace. IRTC. Boy, that's been flushing down the toilet. Dun, 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 dun. Bubble pattern, flush down. It's been doing nothing for a long time. Not my kind of chart. FSLR. Probably needs a flush. PM. Philip Morris. That got a lower time frame bounce. 4 hour. I think it was a 4-hour bounce. Let's turn that back to regular trading hours. Oh, it missed on the 4 hours. So sloppy on the 1 hour. Yeah, I wouldn't have traded this at all. Upside target likely 130, maybe 134 on this move. We see some more retrace action. PDD, making the poppers list. I did not buy anything, even though I said I might think about it. I thought about it. I didn't buy anything. Opportunity here. If you believe that the pattern is going to work out, it's giving you a second chance. This was the first chance. Here's your second chance. Did not quite hit the 618. That's why I didn't buy anything. We didn't get down here. This could still make one more dip lower. Right up there, 175 is probably the upside. How long we do it, how long it takes. It could take 3 to 5 months. Could take well into next year. RTX just keeps grinding higher. We're at the bigger time frame. Bounce target 1618. 2618 up around 150 if we can do it. JNUG, right up to the target. Wow. Absolutely amazing. Next target up 69 on JNUG. LEGN, say all the letters, is a biotech, and that choppy chart. See, everybody understand choppiness, right? Skip a move. Golly. Choppy. This move, skip a move. Just so choppy and overlapping. Ugh. Just nasty. Even on the way down, choppy and overlapping. This low, this high, overlapping. Yeah. Even though it's on the poppers list, it may get a flush. GDXU, wow. 64, possibly 73 above that. All right, decliners list was much bigger. MedP, well, probably going on a retrace at this point. Cool. There's the low, there's the high. Support zone right down here. If you're new, like you're relatively new, you don't understand what I'm doing. All right, ask questions in the chat. It's you know, I don't mean to be depressing, but you know, some days we got to do a reality check. All right, we're getting a pullback in the market. I didn't anticipate a pullback in the market, but you know, you got to be prepared. It's not like, you know, would you come watch me if I was like hype in the market and we got a giant pullback and you weren't expecting it? You know, if I say, hey, there's more downside to go and we get more downside, isn't that better? So, I mean, sometimes there's, you know, we all love it for people to tell us what we want to hear, but reality check is in order. So this is the low. When I look at a chart, that's the low I'm looking at. This is the high I'm looking at. It doesn't matter what the time frame is, all right? You zoom out so you can see this move. Why not this low? Because this one. Why not this low? Because this was a pretty major correction here compared to, see how this move right here was bigger than anything in here. Right? This move right here is a similar size move right now to that move. Doesn't matter the time frame, right? Daily chart, minute chart, 15-minute chart, 30-second chart, doesn't matter. When you see a move and a move, everything in between there was one move. All right, that was, even though we had humps and bumps along the way, that built up one move. Now we can start breaking it down. How many sub moves build up this move? And we can debate this all day. That becomes an analyst. All right, for high level stuff, and you're like, well, I don't just look at the chart and see that real quick. I've been doing this for years. It took me 4 years of grinding through this before I ever got lucky enough to hit something big and then became a guru. And I've still been doing this live like every day for years now. Every week for 3 years, I've been doing 30 minutes of awesome. Tonight at 5 p.m., please come, set a reminder. And then you look at it in the morning show. I've been doing this for we're getting close to 2 years now. Every morning I come on here and do dozens of charts. Now, if you're like, well, I'll never get as good as JT. Yeah, if you don't practice and do dozens of charts, you won't. I mean, it's just the cold, hard reality. Like, it does take practice. So I'm trying to help out some new people realize that right here and right here, these are the moves I'm looking for. So when I see that, the move in between, that's the swing low I'm interested in right there. That's the swing high I'm interested in right here. And now this is the retrace that I think is going to happen off of that move. That's the 618. We break it. Starts being likely we're going down here. This works on all time frames. Now, there's some other patterns that kind of go together with this, but it works up and down. Like if you have the same kind of setup all upside down, I can show you what we don't even change the ticker. Watch this. Watch this. Hold my beer. Watch this. Oh, come on. Trading View's busy. Inverse MedP. I gotta take it off the log, or put it on log skin, so it looks a little bit normal. This is just upside down, all right? This move looks similar to this move. Even if you take it off log mode. Now it's that move and that move. Everything in between, small, this move, kind of similar size. That high, this low, that 618 level is what we're looking for. Now, that's 1 over MedP. If you just wanted complete flip upside down. There you go again. Does this chart look like something you'd buy? If it does, MedP is probably going down, because that's upside down MedP. Genuine Parts Company, probably flushing on down. This is the big low. This is the big high. Support down here. We get below that, we may go even further down. Schwab, starting to reach extensions here. Cool, thanks Amazon. This move right here, this correction, we're in the first target. Next target, 455. We may bounce off the roadmap line, retest that breakout, and get the extension. GE, Aerospace. One of these moves is going to be the last move. GE Veranova keeps rocking and rolling too. DHR. Watch for that to break down below the roadmap line. Logi grinding it on the roadmap line. This would look better if we did a deeper retrace down to this 618 level down in here. Kind of popped it even higher. That pulls this up. Pulls this one up just a little bit. Looking for that retrace down in this vicinity down here. FNGU. Potentially going to pop up. This is interesting. Look at this. This started out down, but it's turning around quickly. This right here, even in the face of the correction yesterday and today so far, if we pop this out, this may lead to a big upside. We do have this gap down resistance right here. This could be heading on up. Is market turning? No, not really turning yet. This is interesting. This is FANG index 3x leverage. 3x leverage on FANG. This is telling an interesting story here. Assets under management, fund flows. It's interesting. We don't have information about what to hold. Have to go dig more. It's 3x leverage on FANG. That's interesting. It's showing the breakout there. Apple, not on Apple. Oh, it's on Microsoft. Look at that. Nvidia showing some strength. So yesterday and today, Microsoft, Nvidia. Meta's not really being strong. Let's see. Amazon just holding its own, not really doing much. Google not really doing much, but it does have a green candle. It's not a big one. Holding in there. We do have resistance up here on Google. Interesting. So why do I dive through the stuff I do? There's opportunities hidden, and you got to know, like, you got to know your components. Like when you read 3x, you can't just dismiss this. You got to go, well, why is that up when it was on the decliners list? You start going to look for opportunities. All right, Microsoft being strong, that could be a bounce. If we actually break out, like, you should have alerts set right up here. We have alert. If we break through that, guess where we're heading? Up here. Now, might this happen today? I don't know. Probably doubtful. I doubt we do one giant move today, but over the coming weeks, we could do that. All right. Even with, the election's coming up, FOMC, all that stuff, like there's potential to get a correction, but the actual fallout is not going to be instantaneous. It's gonna be something we deal with for the next decade, 2 decades, 3 decades. When this debt thing comes apart, when Doge happens, whatever, if it does, that goes to levels we can't service anymore. Whatever happens, it doesn't, it's just like the beginning of a new chapter here in a couple weeks. It's not going to be the end. It's not going to be like, we're not going to flush this out and this be all done. It's going to be our new way of life for a while. So Schwab, Sherwin-Williams, sorry. Saying one more thing, meet another. Sherwin-Williams. Can't even read what's on the screen. Thank you for correcting me. And Lockheed Martin. Right down here. Home Depot. Probably going to correct. Nail. Almost there. Probably kind of correct. P-Car. Probably going to correct. Now, does this hold or do we fold it at this point? Bust it through. Medco, or Moody's. There's another one that's Medco. Moody's probably going to come back to the roadmap line. PHM. Probably going to come back to the roadmap line. KBN. KMB, Kimberly-Clark, is at the roadmap line. So this one. There we go. And this high, this low. If we hold this, turn it, break back above this. Opportunity has set up 150 on the upside. PII, Polaris. Could go a little deeper down to 69. It certainly hasn't broke through the roadmap line and shown that it's made a bottom yet. Deck. Just consolidating on the roadmap line. Nothing. This, to me, is dangerous. Not really the stuff I want to get involved in. Lows. There was the target. We may retrace at this point. We got it. Look at that. Whenever I talked about that back in June, boom, right up there. Beautiful. We broke out of the downtrend of lows. Lows on lows. Right up to the target. What's next? You got me? There's no clear path next. Now we could retest the breakout. That was the high there, retest that breakout and push it on up to 320, 318, 320 area. Red line there. Coming across. It's like a zone. We could test into that, possibly wait for the roadmap line to come up, and then go test that higher extension right up there. Possible. Coin, It's not high probability at this point. Coin still waiting on this thing to break out. So close. Downtrend of those two highs. Of course, we have a different downtrend of highs up here. This one looks like kind of the operative one at this point. There's 1, 2, 3, 4. Rejected a little bit. If we break through that zone, likely we're going up here to 300 at least on coin. COHR. Retrace probably in order. That was up through the extension target. Drug. This one. I'm telling you, this is coming back here sometime or another. Could be way out here. Probably coming back down sooner or later. Sooner or later. FI. That's probably coming back down. Wild move. 205 is the next move up if we're going to get an extension, and then possibly 240 above that. I wouldn't expect much more than 240 before we get a bigger pullback. MSTR was dropping. Now we're turning it around. Bitcoin must be working on something here. Yeah, little green doji barely. If we can get back up, break out above 70,000, Bitcoin can rip. MSTR can rip. All the things can rip right along with it. DHI. Looks like we're going to come back down to the roadmap line down here. We hit the extension targets. And well over the extension targets. Probably coming back down. Boom. Not a bullish chart. Rejected and extension. And we're probably already at the downside targets. Cool. Already at downside targets. Could go down to 8. It's low price stuff in a dumpster fire. SPXL hit the targets pretty firmly. LEN, Lenar, back to the roadmap line. TECL, consolidating. TSM. Still got 100 of my friends here. TSM, hit the target, roadmap line. Apple, 243 is the upside extension. Snow has not made what I consider a high probability low yet. This is probably going to make a lower low. VST, probably going to retrace. NVO, probably going to get extension. TXN. If we can hold the roadmap line and turn it back above 206, we're looking for 217, 220. If we break down, we may come back and retest this 180 area. ARM, holding that resistance really well. There's the support at the roadmap line, and then the next support down here. AVGO has not made it out to the 194 target yet. Consolidating right there near the high. We may pop it. MSTU. 2x on MicroStrategy. This can rock and roll higher if MSTR goes up. LABU. 3x leverage on biotech. This has a coin flip, basically. Watermelon seed squeeze. Squeezing the seed. Does it pop up here to the target, or does it break down and flush down lower? You tell me. It had set up a high probability pattern, then mucked it up, and now it's basically a coin flip. I don't know. Bulls has not confirmed we're going higher. The proportions of that, this is concerns me a little bit. This is another FANG index. We had the other one, FNGU, and it looked pretty good. This one, not nearly. The different proportions on this one gives me cause for concern here that we may roll down here. Holding this area in that consolidated fashion does not indicate that we're popping higher. Now, it could just be that we needed a little rusty and we bounce off the roadmap line again, and then we go ripping up here. Could do that. I don't see a lot of big tech very willing to move before the earnings reports next week. And then the market's probably going to, like, there's probably going to be weirdness in the market. It's probably going to feel like the market's waiting on something for the next 3 weeks, 2.5 weeks. With all the things that are happening here, Tesla earnings tomorrow, most of the rest of big tech next week, between Wednesday and Thursday, and then the election the Tuesday after that, and the FOMC the Thursday after that. That's a lot of crap coming up. And we have PCE in here and a few other things. There's a lot of stuff coming up. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. You may lose money, all right? This presentation tend to be informational, educational, fun, entertaining, not a recommendation to be buying or selling anything. If you desire personal financial advice, hire and consult a financial advisor. We've got these things coming up. Flash services, flash manufacturing. But then next week, where is it? Somewhere right here. We get the GDP. PCE was in here, I thought. Yeah, here it is. PCE right there on Thursday next week. Right, all piled together. GDP and PCE along with big tech earnings. It's going to be some spicy time here. Spicy time. Maybe good spicy, maybe bad spicy. Depends on how spicy you like it. NNE, nanonuclear, not bad. This has the potential to break out and rip. Don't have the roadmap line. Not enough candles yet. Upside potential 47 to 60. And my bonus trade for the day, Take Two Interactive. Now this one's interesting. So we've got this high, we got this low, we've got this setup, 165 upside potential, but we're inside a bigger set of corrections and consolidations here. And we've kicked off that potential to break on higher on that one, possibly up to 182. Well, let's draw the more conservative target. You may be like, well, why is this the bonus trade, JT? Cool, good question. Look right here. It did the daily setup right here. It has a new potential target, 165.33, stop below 145. That's an $8 upside with the bigger potential upside on there with up to 177. Take Two has a win rate, 85%. The profit factor is negative though. That gives me a little bit of heartburn. 28 trades since 1997. So this is almost statistically significant here. It's pretty much a statistical population. 2 more trades. We got it. This cause for concern. This looks pretty good though. Odds are in our favor. We're going to win. But the losses, when we do take them on this one, are pretty devastating. So it's one thing to be careful. Don't risk big money. There you go. Upside and upside. 2 potentials here. That one and this one. All right. Dun, 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 dun. If anything I said was helpful, beneficial, give me a thumbs up. Remember, tonight, 5 p.m. Eastern, I'll be live. 30 minutes of awesome. I can't do the show without you. Lately, the crowd's been pretty light, and the show, I need people to show up if I'm going to keep doing it. So, just a reminder, please come, please show up. Otherwise, I may have to discontinue the show. I've been doing it for 3 years, every Tuesday. Only missed a couple along the way, and I'll keep doing it as long as people keep showing up. Have a great day, everybody. See you later. Bye for now.